to you about their views on the market. It's a fascinating time to be in the market. And we look forward from hearing from the team in this moment. Thank you for joining us. It's great to have your company, be you in the webinar or live on YouTube. You're welcome to tune in anywhere. We'll be talking about the time. Keep an eye on the timing of this next week. We may move it around a little bit. Daylight savings in New Zealand gives us a little bit of leeway for that. Rightio, I think Jeff, you're in the room. I think Ash, you're in the room. I think that's it for now. Is that right, guys?
G'day, PB. I'm here. Yep.
Yeah, I'm here. Justin's here too.
Brilliant. Justin's in. I don't think he is.
He just sent a message saying he's in.
I need to move him over. Okay. Let's have a quick run around the guys, see how their week's been while I sort out getting Justin some powers in here. How's your week been, Ash?
Week's been good, mate. Week's been very good. Yeah, holding on to things that I've started to build into. Short on the FTSE 100 and continuing to hold on to that. But yeah, nice and solid week, mate. Things are going well at the minute.
All right, fantastic. Fantastic to hear. Look, before we get around the team, I thought I'd have a quick chat with, we're going to go from Justin first, our institutional trader from the fund in the large fund in Hong Kong. Justin, are you with us?
Hey, Paul. Hi. How are you? Can you hear me?
Yeah, mate, I can hear you. Mate, how are things?
Okay. Good. Having the lockdown situation in Hong Kong, bars are shut for the next 14 days, so can only drink at home now.
I'm not sure. I can't imagine a dry Hong Kong personally. Yeah, had a couple of visits there, never completely dry. Be a different place. Mate, markets at the moment pretty volatile. Anything you're looking at?
Very volatile indeed. To be honest, it's very exciting times. A lot of moving parts, but it also presents us with really good opportunities. We were just on the call just now. We discussed the stock markets. A lot of us still think that it's quite early to be putting in large positions in the market. The sell-off was basically mostly about coronavirus fears, and that was the first panic sell-off. But we're only just now starting to see the virus having effect on the real economy. So unemployment numbers, GDP numbers, PMI numbers are just shining through the effects. So those real effects on the economy is what going to drive a re-rating down on earnings on different companies. And so even if you think the companies are cheap right now, and in terms of the PE ratio and all that, the earnings and the PE is going to go down. So your PE ratio is actually going to shoot back up because of that, and not just because the prices are cheap right now. In terms of we had a lot of developments in oil last week as well, so I'm sure Ainsley is going to talk about that later. In terms of currencies, we took a very nice trade in the euro last week, which we're up by 280 odd pips. I still see the euro weakening. The EU is in the epicenter of all the coronavirus things happening, and Italy is the only one that has its numbers kind of starting to slow a little bit, but Spain and Germany and all the other countries are still having the numbers flying pretty high. So I still see the euro weaken to at least hopefully it'll find some support at 1.07 versus the dollar. But there's that. One currency that I'm kind of looking at to hopefully get long is the Aussie. So the reason is there are two reasons. First of all, China numbers look relatively contained to the rest of the world, and we see the factory resumption numbers shooting back up to 80% in many of the cities. So hopefully that at least we'll see some activity coming in the Asian economies. And also the second reason is that Aussie has basically kind of run out of its monetary policies, cutting rates to near zero, and they're now looking more on the fiscal spending side, which hopefully will push up the support for the Australian dollar as well. one thing here is that obviously we are still in a bit of sentiment panic in the market. So the US dollar shortage is still very much in play. And you know, it would be pretty difficult to go short the dollar until some of that panic has gone and some of that demand for the US dollar has gone off, which probably not happening as soon as we think. Probably we'll still see a couple months of dollar strength.
Cheers, mate.
Any
It's-
questions?
Well, I thought I might pop them before we get too many questions. We do need to get to Ash. Great to see the numbers in the room filling up as Justin talked. Mate,
Actually, can
big
I
week
ask
for-
one question, please?
Yes, Jeff.
Question, Justin. This
Hey.
well, new for me. It's not a new thing, I suppose, where you can buy US goods for matchsticks. It would seem these days they don't necessarily need US dollars. I'm led to believe. What's that all about, and what sort of effect might that have on the US dollar?
So the US dollar demand is more about companies holding on to cash, because that obviously is the problem right now, is that you know, their companies are shutting, basically in lockdown and shutting their business. So if they don't have cash to pay off their rents, to pay off their overhead expenses, they're going to go out of business. So the demand for US dollar, one, is there, and the second one is investors are buying. You know, there's a huge demand for US treasuries, which obviously you need US dollars to buy. So that's another reason for the huge surge in the US dollar, is to buy relatively safe. I wouldn't say it's, you know, a huge safe haven asset, but you know, people think that US treasuries are safe, and that's where a lot of the demand is going as well.
Okay, so the decision during the week, and really I can't quote what it was, I just briefly went over it, and it had something to do with those who wish to trade in US or with the US don't necessarily need to pay for the goods and whatever in US dollars, rather in some other form of barter system or whatever it was. Are you not privy to that, or I'm not sure what it is, to be fair? I think it was called paper something or other.
Yeah, I think those are, you know, it's starting to get into pretty extreme you know, ways for people to kind of do business. But those kind of things, obviously they take a longer time to kind of settle in, and it's not easy as done than said. So, you know, I still definitely I still see the US dollar staying pretty strong from the demand until we see some sort of drop in coronavirus infection numbers in the market.
Okay, cool. Thanks, mate.
Yeah, no problem. Paul, you wanted to say something?
Mate, sorry, I was saying I was just muted, mate. We're going to come in. You and I next week are going to come in at 8 p.m. We're going to do a special webinar for Actions to Wealth clients. We're going to talk a little bit about your view on the market. We're also going to talk about an exclusive new educational product you're going to offer to Actions to Wealth clients. What can you tell us about that?
Yeah, so, you know, I've been in the market, and, you know, I obviously, a lot of my friends are asking me a lot of questions about what's going on. And even people who have not invested in the past have been asking me a lot of questions, whether they think the pound is cheap, whether they think they should get in equity. So I think that, you know, for clients in ATW, they would be especially interested right now on what I myself and what some of the institutional players are thinking about the market. And hopefully I just want to give some more clarity to all of you out there on what's going on in the market and how we should position ourselves going forward. So I'll be talking about that. And you know, I am currently stuck at home have been stuck at home for the last 2.5 months, working from home. So I do have a little bit of time on my hands, and I want to use this opportunity to help people who are really serious about trading, to get them on track. And in the mentorship pathway, I've talked about, you know, how I look at fundamentals and all that, but I haven't really shared about my strategy. So I'll be talking, you know, how we could kind of take advantage of that as well in the market.
So Justin, your strategy, two parts that I saw when we talked about the other day. You're going to talk about your longer term time frame strategy for consistent returns, and you're going to talk about how to sort of fire that up on some shorter term charts to multiply returns. What kind of return does that strategy get on if you're trading on a shorter time frame?
So on the longer time frame, you're looking at longer time frame being daily time frame. You're looking at 3 to 7 to 1 sort of returns with a pretty high win rate. I myself am doing around 75 to 80% win rate, and on the lower time frame, we are looking at multiplying that, not even double, but at least getting 10, 15 to 1. And there was one trade where Paul, we looked at, that was giving 53 to 1.
53, yes.
Which was just kind of blew my mind when I saw that. But yeah.
Brilliant, mate. Thank you very much. Look, I will talk to you at 8 o'clock next Sunday night on a webinar from Actions to Wealth. We'll put out the link to the members. It's coming out tonight on the newsletter, guys. So you'll have a chance to hear us have a bit of a chat with Justin about how his trading's going and also about his exclusive offer for Actions to Wealth clients. Justin, we're limiting it, aren't we? You've got a bit of free time, but you don't really have a chance to teach your strategy to a large number of people. How many are we going to limit it to?
To be honest, I'm only looking for a few people because it's going to be quite time intensive for me to have, a very personal connection with these guys and to teach them the strategy well. I want them to learn it really well. So probably limiting it to around, 6 to 10 people max.
Nice, mate. Great. We'll talk to you next Sunday. Thanks for popping in and helping us out. Look, I want to keep moving along. We've got a few guys, other things to do today. It's a busy old world. I don't know what we're doing. We're locked in our houses. Maybe some people are going to go and visit the lounge today instead of staying in the office. Rightio, guys. Let's get to Ash. Ash, what's happening in the market? What are you looking at?
Sorry, so someone just asked the question in the chat, how much is the session? The session is going to be free for all Actions to Wealth clients next Sunday.
The session next Sunday is free for everybody, and we'll talk about his training and the offer on that. We'll make an exclusive offer on that. We've got a couple of nice bonuses we're working on that as well. So we'll cover all of that next week and do some depth on that. I don't want to when we're doing content, I want to stay on as much content as we can. So we will do Justin stuff in detail in a separate session next Sunday night after this session. Be about 8 p.m. so you can do the session, have some dinner, and then come back for that. Rightio, over to Ash, and thank you again, Justin. Over to Ash. Ash, how are things in Brighton? Is it sunny there at the moment?
Yeah, it's beautiful, mate. Yeah, things are looking good here. We're starting to pick the weather up. We should have a nice 20-degree day, which is making certainly the world and life a whole bunch better. We are obviously all in lockdown, and we're having to kind of limit our forays out, but around here, if you go to the right places, you can avoid people and still kind of get out in the fresh summer day. So it's it's pretty good, mate. Life is pretty good at the minute. Can't grumble.
Cheers, mate.
So let's talk about the markets. There's probably 5 products that I think some are interlinked, but 5 products that are interesting to me right now. Obviously, the FTSE 100 is my main one, and I am again looking for some further downside. I like the fact that there's still some confidence out there in the market because it suggests to me that there's going to be another blowout to the downside. And we're looking at this on a weekly chart here, and we've seen the market try an attempt to get back in a roll, back up again, but unable to do so. And last week has given us this bar, which is suggesting that there could be some further selling next week. And if it's not next week, then I still believe it's going to come. Now, the 2 reasons that I think it's coming is that there is a continuous flow of companies that are now not paying dividend this year, which means, that's one aspect of why would you invest at this particular time? Why wouldn't you just keep your money until the end of the year when things might change again? So I think that's one aspect of the story. And the other thing is that the buybacks seem to be limited as well. So, with the buybacks of the companies being limited, then it would suggest that the price is going to be it's going to struggle to get higher. So I'm still short the FTSE, and I'm still short the FTSE definitely down to the lows, possibly beyond, but we'll see how the story develops after that. If we can get back to the lows, then we'll have a fair chunk of profit anyway, and then we can make a decision from that particular point. The link that we have to make between the stock market and another product, though, is with oil, because oil is one aspect and one commodity that seems to be now front and center yet again. We had Donald Trump last week tweeting that he was going to get the Saudi Arabians and Russians back together again. There are some further stories and reports that is probably not going to happen, but have seen as well that Norway are talking about cutting production. So the oil story is going to be developing. And with the oil story developing, we have to be a little bit careful with the FTSE, because BP and Shell specifically is a really big player in the FTSE 100 stock market. And if other companies, if other stocks are fairly flat on the day, then Shell and BP have got a decent chance because of their market cap, because they are such big players. They've got a decent chance of holding the FTSE 100 price a bit more positive. So the oil story development will possibly just skew some of the timing. And if this is to fly to the upside, then I probably wouldn't expect so much downside in the FTSE. So I'm closely watching oil and what's going to happen with the oil development. As I say, there's been almost conflicting stories, and I think because it is a developing story, it's going to make it very difficult to just make an assumption on whether we go much higher from here or whether we actually get back to the lows from here and possibly beyond. I still think that there's a half decent chance that could happen, particularly if they don't come to an agreement with Russia and Saudi Arabia, because there are just apart from obviously China stepped into the markets, and that certainly helped buoy things with oil. But the supply chain, when it comes down to companies that need oil right now, just isn't there. So the oil story is an interesting one. So we'll see what happens with that. And gold as well. Still very, very interested in gold. I'd like to see gold higher and see whether that one can actually take off through these upper bound levels as well. So I think gold is a buy. I think the FTSE is a short. I'm watching oil for a bit of a barometer to see a little bit about timing. I think we have to take a medium view on the FTSE. You know, not too short term. With the FTSE, we just I'm going to be holding until I can get down to that lower price, unless I see some fundamental change in oil and having a look at this the specific stocks to see how that's going to be affecting those. Now the other one's the euro, and the Australian dollar as well. Australian dollar I find interesting because, you know, the numbers out of China are a lot more stable than the rest of the globe. And that does kind of put the Australian dollar, in my opinion, front and center. So I think when it comes down to the Aussie dollar, I think we could be looking for some upside, or certainly be looking for this one to be well and truly on our watch list for some pickup. Now, I'm not sure whether it's a good idea to trade it against the dollar per se, but the one that I would be interested in is the euro, because I am with Justin. I'm also bearish on the euro, and you know, I had a flash of a thought the other day that this is again going to put the European Union project back under stress. You know, we haven't really seen it under stress, true stress, since the situation with Greece, because even Brexit really managed to consolidate the European Union members together. But with the situation with Italy and the amount of money that those guys are going to need, and possibly Spain as well, does the story of the European Union's stabilization remain, or is this going to put this under pressure? So that hasn't really materialized as yet, but I think, you know, remembering back to what happened with the situation with Greece, it really was under stress, and at the time I was starting to wonder whether it was going to survive then, never mind now. And it was obviously a similar scenario with a global financial situation with Greece that put the euro dollar under a lot of stress. So I think the Aussie euro would be a decent market to look at. Euro Aussie, sorry, would be a decent market to look at, shorting the euro against the Aussie. You know, if I like the Aussie and I like the story that's developing out of the Chinese numbers, then that does put for me the Australian dollar front and center. And I'm pretty bearish on the euro because of what could potentially happen to the European Union. So and then potentially the euro as well. So I think the euro Aussie would be something that I'd be watching, not necessarily next week, but over the next month to the next quarter. I'd be looking to see if there's any development in that one to see if I could short the euro Aussie. Still long gold, still short stocks, and I'm watching oil for a barometer to see whether that's going to suggest any difference in timing with stocks.
Mate, you and I are going to be a little bit difficult to argue with each other next week by the look of it, because Aussie, it is all about the Aussie for me at the moment. Well, has been for a few weeks, mind you. It hasn't shown the signs that probably would have liked at this point, but I think that will come with as you say, the data out of China getting a little bit better. Mate, just whilst you're there and whilst I'm here, maybe we should talk about our new show, which is on YouTube now, every US Open as of tomorrow.
Yes.
What are we doing there? Why are we punishing ourselves so much?
Well, I think we take advantage of the FTSE 100 Open, so we're effectively trading through the European Open when we run the show right now. But there are opportunities that develop during the day, and most specifically during the US Open. So I think we just want to kind of get back on air and show people that there are potentially some trades to be taken there. Or we're going to be talking about the trades that we already have in the markets and how they're developing. So I think it's a good point to catch up, mates. The US Open. It's a perfect time to get back in.
Great timing for the guys as well, for the team, for the traders, because many of the people in Asia, they really want to listen to it, but 3 o'clock in the afternoon, 4 o'clock in the afternoon, many of them are working and they just can't get out and listen to you guys. With you guys moving this to doing a US session as well, 9 o'clock Singapore, isn't it going to be?
Yep.
Yes, it will be. Yeah, 9. Yeah.
Perfect time. Kids are in bed. If you've got kids, most people can do an hour from 9 to 10. It really does put you right in front of the. Excuse me, guys. Just got a bit of a cough. I don't have cough. Just got a bit of a cough. Nothing more serious. Great time for people who are locked in to put aside an hour of their day, 9 to 10. Even if you're working from home, you can have an hour from 9 to 10. Watch you guys trade the market. I know people love the UK session you guys do, so having the US session as well. Trying to get as people get locked in and. Locked in Singapore, locked in Hong Kong, locked in Malaysia, locked in New Zealand, locked in the UK. We're trying to get more of our guys, more of our senior guys doing more stuff in front of you guys if we can at all. I'm looking forward to that a lot, guys.
Yeah, should be good. Jeff and I really enjoy the UK show, so it's going to be more of the same. We do cover some of the fundamental aspects of why the market's moving in that show as well. So it's a great top-up. Anything that anybody's done, it's a really good top-up every day just to kind of discuss the markets, and the question box is there as well. So we do have some ideas and opinions from some of the participants as well, and we do get some senior traders in that room occasionally too.
As we all know,
get a few more guests in as well. Sorry, Jeff, after you.
You're right. As we all know, the markets don't move every session, and if Asia session, which generally is the flatter of the 3 sessions, then you're going to get movement generally in one of the 2 sessions, UK or US. Now, if we don't get it in the UK, also, we're often telling people, if this happens, then do that. If that happens, then do this. This way, we can actually show them how to do that. Pardon me, how to execute it and how to manage it. So, yeah, we're looking forward to that.
Mate, my understanding is if you had people, the run you guys have been on for the last 3 or 4 months in that show, there's more than you guys looking forward to this. I'll tell you, I can't wait for it to happen. And I will have a very, very happy group of clients when we get there too. Thanks, guys. Ash, thanks for your insight.
No problem. Yeah, I better go. Just quickly, Pooling was just asking about what do I think about Donald Trump's threats of putting tariffs on oil imports to protect local energy working industry. Do you know what I do think? He's motivated. Whether what he says happens or not is not really what I'm focusing on. But what I am focusing on is Donald Trump is now. He's got the oil story right in his crosshair, and that does suggest that whatever happens from here, he will do everything in his power to make sure that oil doesn't go too much lower, if lower at all from this particular point. So I do think that is actually a fairly bullish signal in itself to a degree with oil, because no matter what happens, Donald Trump will do anything he can, probably from here. So he's certainly kind of he's got his weapons out, hasn't he? He's got his armory out. So yeah, we got to watch that space too. But I think there's other stories that probably develop in the short term that at this stage maybe just throw a little bit of water on that one. So let's watch out for that one, because that may well be one that we need to watch the developments of, rather than focusing on straight away on Monday.
Yeah, I think it's worth keeping an eye on. I think election year, seeing Trump come in and try and, part of his election mandate is he'll protect US workers. So I think he's he'll try and put some kind of, he doesn't often act on his threats, but he could well put some kind of act behind this at some stage in the next few weeks, depending on what happens on the various meetings going on next week. It's going to be a busy week for all next week with a lot of meetings. Guys, let's get, thank you very much, Ash. We're going to go, Julian, Ainsley, Jeff. Julian, are you with us?
Hey guys, hope you can all hear me, and I'm coming through loud and clear from very sunny and warm New Zealand, and hello everybody wherever you are in the world. So I'm just going to follow on from what Ash was saying about oil, and I think he's nailed it to a certain extent, is that Donald Trump has it in his crosshairs. That doesn't mean to say that Monday it's going to rally another $10. I think what it does is that it puts a floor underneath potential oil price movements in the future going significantly lower, and I think we have to respect that. In terms of trading it, that is not the same as trading it. All I'm really saying, and all Ash is really saying, is that probably the downside from here is limited if it goes back towards $20 again. We maybe aren't going to see 13, which was sort of like I guess, the long-term target. And there's every opportunity that we'll get, hopefully, the higher low for us, which is the major buy signal. So we'll see what happens with oil. I suspect, given the news over the weekend, that we're not going to open as bullish on oil as we closed it on Friday, and we'll probably end up opening a little bit lower, because what I find remarkable is that Donald Trump, if you'd have phoned the Russian president, I can imagine how that conversation would have gone. Donald would have said, "Hey, Vladimir, do you mind just cutting production a little bit and doing what you can to help the world out right now, because we've all got a bit of a problem." And I suspect Putin, after about 17 swear words, would have probably mentioned sanctions somewhere in the middle of that and said, "Well, you move those, we'll move on the oil output. Otherwise, we've got no interest. Thanks for calling, Donald." And probably Don would have been going, "Hello, are you there?" And not realizing that, in fact, Putin had rung off about 3 minutes earlier. So I strongly suspect that his only leverage is with the Saudi king, and if there's going to be anybody coming to the table, it'll be then. I don't think the Russians have got any interest unless there's going to be a movement on sanctions, which right now, given it's an election year and given Donald Trump's attitude towards sanctions, the Republican Party's attitude towards sanctions, means that probably this is a Saudi game and not a Russian game. And the Saudis are going to have to put the pressure on the Russians separately in a separate type of back channel. I don't know how that's going to work. So let's, when we take all of that aside, there's a bit of hassle around this in the oil market. Let's look at what the facts are. The facts are it's rallied from $20 or $19 to $28, almost in a straight line in 2 straight days on the back of some tweets. That's probably put a low in place. That doesn't mean to say it's going to be the low, but it means it's a fairly good estimate of what's been going on recently. So let's be bullish on oil for the time being until proved otherwise. I think your stops are wide. $22 is probably where you're wrong, somewhere in that area, sometime around then. And Wednesday, Thursday this week, there may be a buying opportunity, and probably that might be the opportunity that people who aren't in this market already can get back in for another trade up. I don't think we're going anywhere near the $45, not in this leg, to close that gap. We're a long way away from that. We'd have to see a significant recovery in the economy, I think, before we're even contemplating that at the moment. But who knows? Things might surprise us all. But for the time being, let's go with that. Donald Trump has got it in his sights, and probably the market downside is limited from here on in.
Julian, sorry to butt in, mate. A question from one of the guys in your broadcast group. When you talked about the first profitable close, you're talking about on a daily chart, aren't you?
It's the first profitable open, and it's the daily chart, correct?
Great. Okay. Cheers, mate. Thank you.
And you can use any time frame. If you decide to use the US Open, that's fine. But the Open on the night before is also valid as well too. It's up to you. Whenever I talk about exits, Paul, it's always an interesting discussion. There's no such thing as the right place to get out of a position. If you're profitable, you're probably going to be wrong. This happens to be a marker that we use for system testing, and that seems to work out quite well.
Yep, agreed. I like first profitable close as a TP1, to be honest. I think it's a good place to be out of any market. Okay,
Yeah,
mate, back
yeah.
to you. Sorry.
No, that's okay. And so let's run around the world in terms of some vague order. So stocks, I'm sort of a little bit with Ash on this. My sense is that at the back of my mind is this 28,000 level in the Dow. It's like a really important gap, and for me, a resistance point. If we can get up that high in the next couple of weeks, I think that's probably a selling point somewhere in that area. If we can't get up there, we're going to go down to the lows, and this is just the retracement off the large second wave down. And if you look at the sentiment cycle, which is always my anchor in these significant stock market corrections, we need another leg. Somewhere or other, there's got to be another leg down that is going to be the point of capitulation. Way too many of my friends have been buying the dip on a value trade because they feel it's not as high as it was. Stocks are not as high as they were, and therefore they're cheap. Well, history has probably proved that just occasionally that strategy doesn't hold true. And when we need to look at this, we look at this through the lens of the sentiment cycle. And the sentiment cycle always in these situations suggests there's a third wave to come down. And all we've done really now is we're mucking around with some kind of retracement off this first, what we call the panic phase. Maybe, an elongated lockdown. I don't know. We can think of a million reasons, actually, probably 1.6 million reasons at the moment why the market should probably trade a bit lower. But with a staggering amount of deaths to add into that equation, I don't think this economic situation resolves itself totally quickly. However, it's going to be choppy, it's going to be volatile, but I'd love to see the market have a go at that low and reject that previous low that we've got in place on the Dow, and or follow through and try and get to a lower point whenever that's going to be. So for me, the top side. Sorry, Paul.
I don't have a sentiment cycle on this computer to show. Do you want me to free screen here and go and grab one off Google to come back and have a look at?
Yeah, we could do that. That would be good. I think people can see the three waves there, but I think there's only two of them. So yeah, absolutely. Thanks, Paul. Look, guys, let's so for me, let's look at some of the seasonal patterns around stocks. So there's a cycle low due sometime in the middle of April. There's also Easter, and Easter's usually quite a bullish time for stocks. So sometime around the middle of this week, there's an opportunity to buy. That seems to be right about 90% of the time at the moment over the last 15 years. So there's a good opportunity. How you trade that is up to you. You guys are all pros. You know what you're doing. I'll obviously be posting trades on my broadcast group around that with specific entry points and take profits and stop losses. But suffice to say that I think the market has a bullish bias for 2 or 3 days. It's a tough call to go longer stocks over the Easter break with 4 days of news potentially there, but who knows? So yeah, that's a very good. Thank you, Paul. You've actually nailed it. That's a great picture. That, guys, that's the sentiment cycle in a nutshell. I believe we've just done the panic phase. I think there's what we're doing now is, and actually weirdly, if you look at that chart compared to what the stock market's doing right now, that chart looks eerily familiar. If we do not rally from here, then it obviously suggests that we're maybe looking for a third leg down, which is the capitulation or discouragement phase. That's when everybody's had enough of trading stocks and they don't want to ever do it again. They go back to bonds or they go back to cash or something else. And that will be the opportunity that the long-term players need to buy. But that could take some time, and who knows? This is a moving picture at the moment. Thank you, Paul. Paul is busy circular bounce. Traditionally, with these bounces, you normally tend to get to a 382 retracement. If you go back and look at the analogs of previous bounces in the stock market, given the accelerated move to the downside that we're struggling a little bit with analogs in terms of trying to figure out what this means. And there haven't been very many, so it's like, I'm looking at a sample size of 3 or 4. In the last 100 years, as far as the US stock market is concerned, there really aren't very many examples of this. And true analogs, you've only actually got 2. So when you look at this, we saw the 38% retracement. That seemed reasonable. I still can't get out of my head that gap on the weekly chart, which is a little bit higher up. And I think we're going to end up trading back a little bit higher if we do, but then that might lead to that, not that gap, Paul, you can't see it. It's around about the 50% mark. It won't show up there too much. You need to probably look at it on a bar chart. It might see it a bit more clearly. And I think you might have the 24-hour Dow here, whereas you need to maybe look at a session only. But trust me, guys, there's a level at around about 28,000 that I think is pretty critical. And so if you look at that in terms of how that's unfolding right now, it's entirely in line with 2 waves of the sentiment cycle, and there's a third one to come, right? And that's the discouragement. I just don't know how we're going to get there. So I think we have to get the people who all bought stocks 3 weeks ago out the market. But this is my opinion, and purely my opinion only. Obviously, it is just an opinion and nothing else. So right, let's get back to talking about FX, because FX are quite exciting. Or maybe I just have a quick mention of bonds in here. I'm actually very bullish of fixed income, very bearish of fixed income markets right now. I think bond prices will go lower, interest rates will go higher, but only and only in the back end of the curve. That means 10 years and beyond. I think there's a bear steepener coming, which is going to be the biggest bear steepener in the last 30 years. It's going to be enormous, and I think it's a play for at least 18 months to 2 years easy. That's my overall prediction. For those who don't know what a bear steepener is, that means that yields go up, prices fall, but prices will fall more in the longer end of the curve relative to the shorter end of the curve. That means 30 years versus 2 years. For those of you that don't have any idea what I've just said, don't worry about it. For those of you that don't have any idea and want to find out more, go look up what's a interest rate yield curve, and go look it up on Google, and then come back and ask some questions next week. Right, let's go look at foreign exchange. Foreign exchange is really interesting. I am a bullish on the Comdols, the Canadian, Aussie, and the Kiwi. Actually, I fancy the Kiwi the best, not just because I live here, but because we've handled the coronavirus crisis, fingers crossed, and I am literally crossing every single finger I have here. We've handled it about as well as we can do. And we shut down early. We went to lockdown early. Our case count is barely 1,000. We've only had a very, touch wood, and for God's sake, this is a touch wood thing in this world. We've had very few people die of it. I think we've only got 1 death so far. I'm not saying it's contained, but we're doing everything we can to contain it. New Zealand will become an island, which is exactly what they are, and will prevent anybody from overseas coming in. If we can beat this thing, we will recover the fastest of any of the G7 economies or G10 economies. And therefore, on that basis alone, New Zealand dollar crosses are probably a buy at some point in the next 2 weeks. Most notable ones to look at could be against the UK, could be against the Aussie, which is trading pretty much, the New Zealand dollars pretty much trading at all-time highs there. Then maybe something worth thinking about. But I'm bullish of the Kiwi against the US is the obvious one to choose as the buy point. And again, what we're looking for in this overall, you pulled up a monthly chart on that, Paul, you see the reason why that's bullish. And you could look at it and you can justify, right, and you can justify if we do not break those lows we put in place on that tail on the monthly chart over the course of the next 2 weeks. If we don't break that, right, we're looking for a higher low, and everybody knows how to trade higher lows. You guys have all done the courses. You know exactly what that means. So I'm bullish on that for no other reason than technically it looks like it's bullish, and we're going to come out of this hard and fast, much harder and faster, I think, than many other economies, which is awesome. If you want to get exotic, I think the Mexican peso is ridiculous against the US dollar right now, at trading at something like 24. I think that's crazy. I think it's worth a lot more than that. So in other words, the price will fall. If you want to get even more exotic, I think the Indian rupee could be another one. That country always surprises me in terms of its ability to do things which are not quite what you think is going to happen. And their lockdown appears to be, weirdly, in a country like India, actually quite significant, and looking like in about 6 weeks' time, they'll be in a reasonably competent space, despite all the inherent problems you may assume to be the case in India. So there's some of these currencies out there that I think are really interesting. One of the overriding principles that we talked about last week is that I'm very I'm very bullish on the US dollar in the medium term because of the dollar shortage. It hasn't been mitigated yet. I still have that in the back of my mind, right? Which is the reason why you have to pick and choose your currencies very carefully. Not every one of them will work out. Witness the conversation about the euro we had just a few minutes ago. I think there's a lot of credibility in that. But there'll be no trouble, I don't think, from those that US dollar shortage will be mitigated with the recent Fed action and probably should survive until about late May, early June when we get to the next quarter date when that shortage will show up again. So for the next 8 to 10 weeks, we've got a bit of time to play. And that's the reason why I quite like the commodity dollar currencies. I prefer Aussie and Kiwi against the US, against the Canadian dollar, but I still think that's quite interesting. Do I have anything else to talk about? No, I think that's about it for me, Paul. I'm done.
Cheers, mate. Thank you for that. There's dollar CAD.
There's a double top.
Yeah, there was a double top. Interesting looking and quite extended too. If you look from the 200-day
Right.
moving average, she's a long way away compared to how far
that's
she
a
normally gets from
monthly,
the
right?
200-day moving
So-
average. That's a monthly, yeah.
Could you go to the daily chart on that, please?
Yeah, mate. Oh, that is
So
extended.
here's a good lesson in how you play this, right? So there's two options here, right? From this point, the market does, this is if you can just see it, Paul, from the high to where the recent low was, that's a healthy market correction from that crazy breakout we had as things went, as the US dollar went nuts coming into the middle of March. And then since the middle of March, we've sort of come back a little bit and consolidated, and we're sitting here at decision point time, right? So we're either decision point where the market's going to go higher or low. That's going to get us into a triangle situation. They're going to wax volatility. They're going to make sure that all the option players can recover their money being short pole for probably a little while longer. I think the risk is here of breakouts. So the question is, where do you trade the volatility breakouts from here? I'm looking at your chart, Paul, somewhere around the 143.70 mark. Above that, I'm interested. And below that 140 level, I get really interested for the downside trade. So exactly. So look, if we're going 143.70, Paul, is the number I had in mind. So we start to move above that. I think that gets quite interesting. And we're on watch then, right? We're on watch for what? We're going to go to the point where sellers showed up before, the old high, about 146, 147. So that's our test. And then below 140, really, I think is where it also gets interesting on the downside. So this is not a market where I think we're going to consolidate for a long period of time and do absolutely nothing. Volatility is way too high right now. We're going to go somewhere or the other and probably retest the highs first would be my call, and then we fail. If my theory about the US dollar for the next 10 weeks comes true. If it doesn't, then we're going to probably just retest that high and then we'll see if sellers show up. So either way, there's a couple of really interesting ideas and interesting trades thinking about it. One thing's for sure is we will not sit where we are right now.
Mate,
So it
I'm
will
going to ask
someplace.
you, you've talked a lot about the dollar shortage, and we've been pretty careful to not get too technical about it because it can get really technical. But the Fed finally came out this week and said, there's a dollar shortage. We're going to put these measures into place to do something about it. We're going to put more than $1 trillion into it. Do you think we're going to, is it a credible play versus the dollar shortage, or is there still more work to be done?
Yeah, look, I'll summarize that, Paul, with one quick sentence, really. So the IMF this week also came out and said there are 80 different requests sitting on its desk right now from different countries trying to cover their dollar shorts. So do you think $1 trillion's enough?
It doesn't sound like it.
There he is. Okay.
It's a
That's
lot of
my
money.
argument.
It sounds like a lot of money. I'm
Hey,
okay
$1
with
trillion
give me
here,
$1
$1
trillion. I'm
trillion there
okay.
until you get to real money, right?
Yeah, gosh. Okay, cheers. Is that it for you, Julian?
That is, I'll just to follow up that comment. The IMF have never seen anything like it, by the way. There's never been 80 different countries asking for assistance ever in the history of the IMF, and that's been going since 1945.
Yeah, it's a weird time we're looking at, and gosh, you know, I think part of being a trader, right, is you've got to find that line between being positive and being negative, and you've just got to be a realist. And you know, you just hope that that there's you know, some good news coming. There's just a bit of optimism around that. You know, containment. You know, our sort of self-isolating. You know, it's going to bring. It's going to bring good news for us. I find that interesting that we think we found a solution to coronavirus, and yet there is not one country in the world that has a case that's had a case of it, which doesn't have a case of it today. Not one.
No, and look, actually, Paul, it's really, you've made a really important point. Our job is to do two things. Our job is to forget about the emotions of all of this and just trade what we see, right? At the moment, we have stop losses which are enormous compared to what we were doing even 2 months ago, simply
Yep.
because the volatility is ridiculous, right? So therefore, the amount of capital that you're putting at risk, if you're capital neutral between what you put at risk 2 months ago and what you're putting at risk now, right, you will be taking much smaller position sizes. That's sort of the logical thing here. The game here is to be here tomorrow, right? What you do not want to do is to take trades which will prevent you from being here as a trader tomorrow. And that we will get through this, and there will be umpteen opportunities, and you'll look back and go with your coulda, woulda, shoulda hat and go, oh, for God's sake, it was obvious that none of this is obvious, right? This market there isn't a value that you can place on any particular asset market right now that makes any sense whatsoever, right? Any sense at all, because by the time 3 days roll forward, you could be 15% different. Well, that isn't a store of value or any measure of value. That's just bollocks. Sorry, excuse my French to everybody who's out there. So the reality is right now, it's a trading market. You have to trade it, manage your risk properly, keep going, be here tomorrow. That's the game plan. Okay, if you're here tomorrow, the opportunities will just be literally, there'll be so many of them, you won't know what to do with them. At the moment, trading is a momentum-driven market based upon what's happening right now on the hourly or the 4-hourly chart and what's going on. It has no, oil's up $30, 30% on the week, right? 30% on the week.
Yeah.
Actually, within 2 days, in fact, within 48 hours, on the back of a tweet. Yeah, so and that's not a small market. And therefore, by definition, that obviously defines the value. No, it doesn't. There's no value that you can attach to oil that makes any sense right now.
If you get through this, if you look after your risk and you trade cautiously and you learn, next time this happens, everybody looks at you and says, well, you've traded one of these before. You got through that coronavirus thing. What do we do? And you'll know. And this is about learning. It's about just looking after stuff. And look, if you get on the right side, and I'll be, I'm going to use some words that I don't like to use as a trader, but if you as a new trader just got lucky and picked up the oil move, well, good on you. You've made a fortune, right? And to be fair, in this show 2 weeks ago, we gave that trade out. We gave it in this show 2 weeks ago. I said, buy oil. And if you bought oil, you're doing okay right now. But if you went into these trades at high risk and got smashed up, you're done. And there's very little chance of guys coming out of this period having lost a little bit of money. Eventually, you'll hit a winner, and it'll be a good winner. It'll take you back to profitability. And don't do the other thing, which is get your risk out of control and get smashed up, because it really, you won't be here next time it happens. And next time it happens, there's some pretty easy, good. I hate using words like this. There's some pretty good trading conditions coming. The Dow is going back to the top. The S&P is going back to the top. It's only a matter of waiting. You don't have to buy it at the bottom. You've got a long way back where you can make some pretty easy money on these things if you are patient. I think gold is going to 2,000 personally. There's some money in that if you're patient as well. Anything else from you before we wind you up, Julian?
No, Paul, I think you've wound me up already.
Julian, I've got some, I don't know what happens when I go live on YouTube. Some of the wording's not particularly good. I can't remember what Ash made some comment to Donald Trump, and I thought you could take that the wrong way. It would sound terrible. Look, I've got one really quick question for you. If you're around, Julian, I wouldn't mind chatting about half an hour, 40 minutes. If you're around, if you're not, I'll probably try and catch you tomorrow. Julian, 40% of US oil imports are from Canada. Why do you think this will affect the dollar CAD pair? Any thoughts on that?
I don't think it matters if you're looking at fundamentals at the moment.
Yeah, we're just trading the emotion around this virus, in my view, right now. More than anything else, that's what we're trading, the emotion around the virus. And that's why I think another leg down in the stock market won't take much to get underway. Cheers, Julian. Thank you very much. Hopefully you're around. Drop me a message. Let me know if you're around for a chat a bit later on. Otherwise, I'll catch you tomorrow. Ainsley.
Oh, hello,
now,
Paul.
Here's what we say about you. Sorry?
Wasn't it a fabulous week last week?
Look, we say that you're our oil and gold expert, and we say that you picked up the gold trade at Christmas and made a six-figure sum. I say your job is to get the move in oil. Did you get the move in oil?
Oh, honey, of course I did.
Yeah, I know the answer. There are some smilers in this market, aren't there? Some people who are pretty happy right now, right?
Yeah, can you chuck one? Because my internet connection is not the best, it's pretty unstable. Can we have a look at an oil chart, please?
We certainly can.
Now, I know somebody asked me last week whether I scaled into gold, and just quickly to answer that, Helen, if you're there, no, I didn't get an opportunity. I got bounced in and out of gold when I was going in, but let's have a look at oil. Hello, oil. Yeah, I got in at just under 20. I was at 1998. And I was patient and patient and patient, and I could see that, yeah, where your first yellow line is there anyway. We just didn't have any more closes below $20. So I was watching that. So that was a really important thing to look at. And then we just started to get it to bid up, and my indicators that I use, the ADX and the MACD, and they were turning. They were turning on that second, call it a double bottom, on the 4 hourly, and it you know, a Trump tweet really helped things along. And then obviously there was the guys in our trading group, the ATW trading group, were all texting, and my phone was buzzing at 10 to 2 in the morning, and I was like, what's going on? What's going on? So I got up, and because I don't have a life, I'm looking at my charts at 2 o'clock in the morning. Now, I'd missed it going up to $27, but I was still pretty happy because I had a pending order that got picked up, and I picked up a second order at $22.50 as well. So I've scaled in lightly on oil, and I've got to say, she's looking good. That trade is looking really good. Now, that's the charts. And yeah,
I've got to jump in here, Ainsley. Excuse me. If you're on an Access to Wealth account, please don't start scaling unless you've done a program with Ainsley or someone like that who's taught you how to scale in properly.
Yes.
Scaling in inappropriately will break the rules of our agreement. So you guys don't want to be doing that at the moment. We are paying out very promptly for people who follow our rules, and for people who break our rules, we are being a little bit
sorry,
tougher.
forget about that. Yeah, I'm sorry, Paul. I forgot. But I took a second.
We just need to make sure we explain it properly to people. It's something that, you know, I think, you know, that in a lot of ways, there are people on this on YouTube that aren't from Access to Wealth, so they won't know much about what we're talking about. But for those who are from Access to Wealth, scaling it is a skill, and it has to be done properly on ATW accounts. It can be done how you like on your own accounts, but if you're putting your profits at risk, you're not really scaling them properly.
No,
okay.
And there is a trick to it, and yeah, just to quickly, without giving a personal coaching session, it's done when first trade is risk-free, the next one is hedged, and you've got to do it so you're in at levels that are relevant, but not only relevant, you do them so that it is also balanced with what you've done, what you've got sitting in the bank, so you preserve your capital.
Look,
so that just gives
a little
it
bit
a
about
real
your levels,
gloss over.
Ainsley. Now, you trade oil and gold a lot, so you've got your own. You subscribe to your own newsletters and those kind of things. But look, if you guys are watching this, here's what I'd like to point out to you. I don't know if Ainsley did this, and it's not too big a deal for an exactness, but largely, when you buy here, you've got a stop loss under the low for bugger all, and when you buy here, you've got a stop loss under weekly pivot for bugger all. Two less than 50-cent stop losses, and you've got 12 to 1 up there, and you've got 16 to 1 up there, 50-cent stop loss, stuck behind really good support. And if you want to understand really good trading, getting your stop losses tight, but behind good levels, you know, a serious low, no closes below this. You might have been dipped out on it. It's quite possible as you got dipped out, had a crack here and got dipped out here. But if you give away 1% here, it doesn't matter when you pick up that move, right? So lovely areas to trade, Ainsley. Lovely areas to trade. Nice patience, let your profit from the first one get well in advance before you get into the second one. We're expecting possibly a little gap down on Monday morning, which may be another opportunity. It's unusual for anything to get this close to monthly pivot on a move as big as this and not get there. I'm not saying it's impossible, but I think it's likely we'll see a higher high at some point, certainly in April and probably in the first week of April, in all honesty.
I think we're still, look, and I've got to say, I wouldn't have taken that first dip either for a long, where you were saying down below, I wouldn't have taken that. I personally just don't take those kind of Yeah,
Yep.
down there. I wouldn't have taken
Yeah.
that.
So really, we're
I
trading
broke-
first high low, aren't we? It was really what we're looking for.
Yep.
The sort of
Yep.
sets
I
up
was
here and
waiting for.
retest it.
Yes. Yes. You're looking for the lack of a push any further lower. And there was just nothing there. It was all the closes were above. So yeah, you've got to be patient, and it will come back and it retests because oil loves to retest levels. It just loves levels.
This
so
is one of the things as well, isn't it, Angie, that, you know, it's different for you than some of the actions to our traders. A lot of our guys trade 15, 20 minutes. And when we say 30 minutes, but a lot of them trade, you know, 10, 15 minutes in the morning and come back and have a look the next day. For you, in a 24-hour period, sometimes you're not even going to look at the chart for a week. And sometimes you're going to spend, you know, in 24 hours, you're going to be back at the charts 20 or 30 times for decent periods of time because you're looking for the right price action to get you into the trade.
yeah, and that was my gold trade at Christmas. I had to look for the right levels. I knew what was coming as well. There was a strong possibility of what was coming. And I was watching. So for me, I had to watch it like a hawk, and that wasn't just 10, 15 minutes. And you adapt to what you are trading. So gold and oil do move a little differently to the currencies, absolutely. But when you're on the right side of it, you want to be on the right side of it, or you want to ride it. So yeah, by the time I woke up on Saturday morning and looked at my account, I went, thank you very much. It was a good week in the office. But yeah, it's got to be careful with where you go in, and you see those, look at the volatility that on that Trump tweet where it took off. Now he's saying it was some tweet, wasn't it? It wasn't even
craziness. It was but
it
again, to
was-
be fair, there was actually a bit of fundamental stuff just before that, which I think gave the tweet some credibility. I think people were probably looking to get in the market before he tweeted, and they've timed off him. I think rather than actually being sentiment driven off him. Look, Andrew,
yeah.
one of the things we're trying to do, and I think we've got to be really careful here. One of the things we're trying to do is teach people good ways to trade, right? That's what we're all about as an organization, right? And
Yes.
you know, we have people who consistently, you look at Jeff in the slingshot, Jeff will be up soon talking about the slingshot, as consistently making money every month, right? That's what they do. For people trading like you're trading with scaling in and timing, yours is about having 3 or 4 big months a year, isn't it? In between, you're flat, you give a little bit back, you don't worry about it too much, you wait for the next big one, you pick off the big one. That's more like your approach to trading, right? It's a slightly different approach, right?
Slightly different approach, yeah. And when I can get on these big ones, that's great. But I've done it so I can diversify my portfolio, because when it is a bit quiet on those commodities that I do like to trade, I will go back to the FX. Now, I had a short dollar yen trade happening as well on this while I was trading this as well. So yeah, it's called keeping it all. Yeah, so I got in at 110.57 last week and rode that down, and then before it flipped down, what was it, 110.57, just under, it should be under that one. Yep. Whoop. Back up a bit, back
Close
up a
enough.
bit.
Yep.
Yeah, there, the bottom, that bar that broke that one. Yeah, I went in on the bottom of that one.
Great.
And yeah,
Where'd you come out? Some nice targets down there for mine.
107.45.
Cool.
Yeah, so just after it bounced back up again.
107. Yeah, lovely. So interesting. And again, I want to talk about different ways of trading, right? But I'm figuring that you've taken this based on the bar, and you've been prepared to take on monthly pivot and 200 moving average. I'm sure
Yeah.
you've watched pretty closely through this area.
It choked in there, you know, it gagged on those levels. Obviously, it was backwards and forwards and backwards and forwards. And as you can see, as soon as it broke, it wanted to come back and retest it. If you go to the right of that level of
Yeah.
consolidation, and there it just choked back again, came back
straight
down.
back
We
at it.
had the
Yeah.
Yep, straight back. But even those numbers, the bad US employment numbers that we had during the week, it still wouldn't break 107. We should have got a seriously. I should have looked at more closely. I should have got out closer to 107 than I did. But it's okay. It was still a good trade.
Yeah, you can make life as a trader pretty miserable worrying about these things, can't you? You know, at the end of the day, you know, you enter where you enter, you exit where you think it's the right place, and you move on with life.
Yep.
If you want to talk to yourself about what you could have done, there's not a trade you'll live in your life which doesn't have a higher or lower price available to you one day. Sometimes you make your decision and you jump, and you know, it's a nice bit of price action here to jump off. You know, it's a test bar coming back. It's the first bar in this move down that closes in the top third of the bar. Oh, sorry, apart from this one here, there was one. No, I guess that one there as well.
Oh, but you're going to have that because it was tracking around. It was on the
Around those
200
areas.
moving average.
Yeah.
So it's just that area. But yeah, look, it didn't close below that level either. So if you look up on a daily chart for dollar yen, excuse me, that is quite a strong level of support. And that's the thing, you know, give yourself a fighting chance and go through your charts on a weekend when the market's closed and look at strong levels of support and resistance. Put them in.
Trade on a daily chart, isn't it? That entry, you know.
Yep.
It's one of the things that I don't mind. I don't mind, and it's not a perfect example, but things that people won't teach you this, but I really like inside bars at the top of a move to go down, like this one here and this one here. That is inside bar.
Those long tails. Such indecision.
I prefer this to this, but we talk about inside bars as indecision bars, but inside bars forming at the reversal end of a longer bar, I really like them for reversal. I always have, and there's the classic one comes off. That for mine's a bit more like it. The classic one, I like it to be a little bit smaller. It gives me a better stop loss, but most people won't trade that short. I would definitely trade that short. This as well, don't know color on this in the end. Open 111.21, close 111. Yeah, so slightly red bar. But the little inside bar off a supporter resistance area, I love it as an entry. I think it's a beautiful place to be.
Yeah. So it's been a good week, and I'm still holding gold, of course. I'm really, my long-term view on gold is gonna go up.
Yeah, I think we're pretty unified in that as a group, aren't we? I mean, I think that doesn't mean it's not going to go down at some point or for a while, but we think long term, we think some targets top side are pretty useful long term on gold, right?
Yeah, and look, at the moment it's being manipulated with the spreads, but the demand for gold is just bonkers, absolutely bonkers at the moment. So the manipulation, the bank's making it difficult. People are hoarding it. It's not being sold. The mines are closed. It's got nowhere to go but up, in my opinion. So we'll see what happens. So I'm holding that. It had a fairly shallow retracement, and it was very short-lived. Came back, had another look at the monthly pivot, and then bang, off it went again. So I'm holding gold. Oil, yeah, there's been a few developments. We chatted about this earlier in our fund chat. Oil's got an interesting week ahead. There's been so many stories flying around oil over the last 2 days, and it has come down to Trump trying to get Russia and Saudi at the table. Then one of the things that the Saudis have said and the Russians have said is the OPEC agreement needs to be rewritten, because at the moment the US don't have a mandate to have any of their production restricted at all. So they want the US and Canada at the table, so they follow the same kind of restrictions. But then the Saudis are blaming the Russians. The Russians are blaming, saying it wasn't their fault that the price of oil crashed because they refused to cut their production. The Russians were probably putting pressure on the Chinese to get production, to say that their manufacturing was coming back to life, which they did duly. And as you said, if you can really believe those numbers coming out of China, then good luck. But look, it does appear that manufacturing is starting to start back up again. Beijing issued a directive to their government agencies to start stockpiling oil, because why wouldn't you? The biggest consumer of oil is looking at their most expensive commodity being at $20, and for the first time in 20 years, they're getting the bargain of the century. So why wouldn't you stockpile? they're going to keep putting pressure and pressure and pressure on because they want it. Trump wants a deal done because anything under $40 hurts the US shale industry badly. So this is killing his industry. And the oil market, the oil industry is pretty powerful. You thought the rifle lot were powerful. Well, those Texans with the 10-gallon hats are pretty impressive as well. But oil,
they're in both those organizations, those boys.
huge. And they would be putting a lot of pressure on Trump to get this back up because anything under $40 is their Achilles heel. And they really need
50-cent stop loss at $19. Wouldn't be a bad place to go to $40.
Yeah, I'm looking at it, that gap being closed. So the meeting, the OPEC meeting that was scheduled for Monday has now been delayed until Thursday. And they've done that because they're saying they're trying to get the Saudis and the Russians to stop bickering like silly little kids in the sandpit. But two, they're trying to get more producers in to get their opinion to see what they can realistically do and how they're going to do that. Now, why they haven't got that figured out already, I mean, for crying out loud, it's a bit of I think that's a lot of rubbish. But that's diplomatic channels for you. But I think you're going to see, one, Trump can't stand the fact that China's making a huge profit at everybody's expense. And two, he's going to protect his very precious US shale oil industry.
I need to move along, but I just want to say that you've got monthly pivot here where you could see a pullback.
Yep.
Wouldn't be at all surprised to see a run up to the start of the gap, this gap here, the bottom of the gap, where you might see a
I think we
pullback.
will.
And then we might see a run
Straight back up,
probably to
close
those
it.
levels there. Might run back
Yep.
up and close the gap. And you know, you've got a chance, you know, take a bit of profit, put a bit back in, take a bit of profit, put a bit back in. And look, these legs down, I haven't worried about getting onto actual levels or anything, but you know, you'd be looking for a pullback down to around here, I'd have thought. You know, so it looks like quite a nice time to be trading. Well, if it does what we think it's going to do, and again, you know, this OPEC stuff goes different than we expect on Friday, and we are back at $20. No, during the week. You know, if OPEC can't sort their crap out and they fight, then $20 for oil becomes very realistic. And I don't think we'll see that, but we certainly could. Any final comments before we go, Ainsley?
No, I just think happy trading. Like I said, I'm pulling my stops up really tight on my oil positions, and let's see how we go. I'm also interested in the Aussie, but I'm going to let Jeff do that one.
Yes.
Thanks, Copper.
We've got a few Australians in these shows, haven't we? Mate, Jeff, looking forward to seeing you in Trad Talk Radio, the original show. Trad Talk Radio doing the US Open as well as the UK Open from this week. Monday, Tuesday, Thursday this week. Monday, Tuesday, Wednesday, Thursday next week, all free. And then we'll have a look at what we're doing with it as a subscription service for a bit of that stuff. Can't do it all for free forever. But Monday, Tuesday, Thursday this week, and Monday, Tuesday, Wednesday, Thursday next week for the UK and the US Open session. Ainsley, if you're done, we'll head to Jeff and have a look at some technical looks at this market as well.
Great. No singing, please, Jeff.
No, I've been banned.
Banned from singing? I know music. What was that last week?
It was racy last week.
Let's just move straight along.
I was
that,
right,
guys.
wasn't I? I was right.
You were indeed. Who could argue with you?
There you go. And who could argue with you guys? Well done. Well traded for the oil thing. And I think that's a great lesson for lots of people listening to this show who, as Paul said, last fortnight or a fortnight ago, you guys were warned that this was going to happen. And bingo, you guys stayed around, and despite a little bit of a anxious dip to the downside, you held your guns and went for it, and I think that's great. Well done.
Thanks, Jeff.
Cheers, mate.
I'll see you
How's it
later.
all looking technically?
Yeah, look, confusing, Paul, not so much from a technical perspective, but it's very, very difficult to be purely technical at the moment. I'm trying to share screen, and
I'll stop sharing, hey? Then it'll make it
Yeah,
easier.
there we go.
Can you talk to Ash during the week? There is a way you can do this without coming out, but he knows that I was in a session where they taught it the other day and I can't remember it. So do check with Ash how we can do this so we can share without having to come in and out all the time.
Okay, cool, will do. Reason I say it's not as crystal clear as I would like it to be is because of the volatility. And the volatility has forced me to really, and I know there's various ways of looking at this, but from my perspective, when I'm trying to trade ranges, I find it very, very difficult at the moment to get in safely, I'll put it that way, on the smaller timeframes without taking a massive stop loss. And if I take a massive stop loss on the 30-minute time frame in particular, it really does destroy my reward potential versus my risk. So I've kind of moved out to the 4-hour and daily charts at the moment. And I think I'm having far more success there than I would be on the 30-minute chart. And I think that will probably remain the case for the duration of this heightened volatility, I would think. And I know there's various ways to look at that because I know different traders who are trading different methodology who are dropping down to the smaller timeframes. So I don't wish to confuse people by that statement, but from my way of trading, which is generally in the opposite direction to most people, it doesn't kind of work. So as I say, for that reason, I'm looking at the bigger picture and trying to establish bigger outlooks, I suppose, and trying to get the moves that are obvious to me. And when I say obvious, sometimes it is, sometimes it isn't. If it isn't, then I'm not trading. And I think that's probably the wise thing to do. Those that are interesting and quite clear to me at the moment include things like EuroCAD. Now, EuroCAD, and I've kind of made this statement all week with anything against the Canadian dollar, is that watch the oil chart. And watch the oil chart very closely, because if you're trading the CAD will be influenced by whatever oil is doing. And I think that's played out to a certain degree. It's kind of flip-flopped on Friday. I was having a look at the charts, and it kind of flip-flopped a little bit versus what oil was doing, obviously going very, very strongly. And oil's daily candle on Friday was a ball terror, I'll say it. So that's a little bit confusing, but the structures that I'm trading aren't confusing at all, and I'm more than happy to share those with you. EuroCAD's one of them, as I said. Tricky part here is we've broken the monthly pivot, but we are at the bottom of my rectangular range or box range, or call it what you want, and therefore I'd be looking for longs at this point, but only after I see something that I like. Now, what I would like to see is not on the daily chart at the moment, or certainly I'd like to see it on the daily chart, but on the 4-hour chart, it's pretty clear to me that we've come back inside this range, and I'd be seeking a higher low in here somewhere. Now, as I said, the monthly pivot is a little bit tricky, or makes it a little bit tricky, because you don't have to take profit before you get to there. Otherwise, as markets do, and we speak about this often, the pivots, horizontal levels, support and resistance, we've just had a conversation about that. This is also a form of support area on this, the 4-hour chart. So its recency is there as well. I would definitely like to see price hit the monthly pivot first, then come back to here, maybe to this level here, and give us that higher low. Then I'd be much more confident about trading this to the high side. The fact that you guys are talking about a pullback in oil is encouraging, because I think we may well see a little bit of a rally here. And I'm not talking bullish euro in any stretch, but I'm simply trading what I see before me. And what I see before me is the potential for this range to continue, and for the euro to go back to 156.90 or thereabouts, around about the 157 mark. Not interested after that. I'll see what happens at that level at that point. Euro yen is another, very, very similar, and it is tough to be bullish the euro at the moment, in particular against the yen, because of this incredible situation in which we find ourselves. 19 basically. And that would tend to lead you towards a strong yen and a not necessarily weak euro based on that, but because of the fundamental situation the guys have spoken about earlier on the euro, I find it very, very difficult to be bullish the euro myself. But again, from a technical perspective, what I see is a strong bottom here. And if I were to see price maybe get up a little bit higher, I'm not sure what level I can find here to get it back to. Maybe it is a monthly pivot, but what makes it rally to there, I don't know. And then a higher low. Happy days, I'd be willing to trade it. Small risk, and I think that's the name of the game for me at the moment. Not putting much on the table, but we are making inroads and we're getting some nice little runs on quite a few pairs. One of the ones, speaking of runs, I'm waiting on, and I noticed Julian said with a very firm tongue in his cheek, there's a double top. I can't remember what the pair was, but I think it might have been a pound pair. This one here really does interest me. It's pound Aussie. If I have a look at the weekly chart, I rarely see a tweezer top of this magnitude that I see on the weekly chart on pound Aussie. It is at a level that is significant, 2040, and also has got a little bit of form back in the day at 2016. I'll go a little bit wider, in fact, on the monthly chart to show you that level. This is the extremely volatile time around about the global financial crisis, and this is the other time around about Brexit. And I spoke about this, I don't know, maybe a month ago, where I was very, very interested to see what would happen at this point. Once we got to this level, it was very, very interesting as to what would happen next. Are we going to break out of this long-term resistance, or are we going to come back on, bounce off it? So break, bounce, good question, don't know. The interesting part about this is that since we've broken out of that level, we really don't know where we're going. We've had a couple of retests and rejections of the trend line. We've tried to get above that 207, 208 mark, failed to do that. And at the moment, we're having another crack at getting through these or to these highs that are that level that I showed you before, this one through here. So we're bang on that level right now. And if I convert that back to, and bear in mind the big double top or tweezer top, if you like, which is probably more accurate, whatever that means to you. To me, it means there's a possibility that this will, in fact, dive away at some stage and dive away substantially. It's those sort of things where you come back in a month or 2 months' time and say, oh, wow, how did I miss that? If I miss it. The key way for me to play this is to wait till I come back into the range and retest the top of that range. So in effect, get a lower high and look to trade that short from there. It's very, very difficult right now to say, okay, place your short below this bar here and put your stop loss there. I think that's probably a little bit risky because, you know, after all intents and purposes, what we really have done is we've broken that very, very strong level. Can we go on and find these highs up above? Maybe, I don't know. But that appears to be your next level, you know, 2,000 pips away. That's a long way from where we are right now. So I'm kind of thinking that this resistance level here is going to work, and it's going to drive price back down towards this longer term trend, if you like. But it's not a fait accompli, and that's for sure. But I am very, very conscious of this big tweezer top at a resistance level. So I am looking for this to turn around and go in the opposite direction. That's pound Aussie. Put that on toast with the bullish aspect that I do have on the Aussie, and I'll get to that in just a tick. But agree very much with what's been said so far. CAD Swiss, I'm not sure why I've got that there, apart from the structure that we do have in place. I traded this during the week. Very unusual for me to trade this, but as the guys in my group would know, we have a little system that allows us to trade that bar there. And so we did that. I have closed 3 open positions from Saturday morning, yesterday morning, because I didn't know what was going to happen over the weekend. I've left 1 open. It's the only one that was in a losing position. So I don't think there's any damage to be done there. The hope is that we'll gap in the right direction. This is one of them. I thought this was an ideal time to get out of this trade once we'd gone pretty much to the top of that range. And we'll wait and see what happens next. Maybe there's another opportunity to get long if that's going to be the case. Or really, you'd be thinking, again, the CAD is very much not pegged, but reliant on what happens with oil. So maybe if oil does retrace, we'll see this come back down towards the bottom of that range. Euro pound, we've had a bit of a picnic on euro pound. I think we flagged this trade to you guys a week or so ago. Maybe not in a lot of the other shows that we did though. That candle there was eminently tradable as far as I was concerned. We came back into the range. This is what we're looking for all the time. That lower high off the weekly pivot, we managed to pick up a lot of that. Close that now. Again, I think there's a support level that we've just hit, and the monthly pivot looks very, very appetizing to me. I think I'd look to get back into this short if it got up to there, however. CAD yen. Yeah, look, structurally, it's interesting because there are actually 2 structures here that I'm looking at. One is on a far bigger picture. That's this rectangle above, which is very much a monthly chart thing. And you can see why I'm interested in that, trading it from the bottom to the top. But there's a whole lot going on inside of that as well, because we have failed 1, 2, 3 times really to get back into that range. Maybe this is the 4th time and we've hit the bottom here. The problem is we haven't hit the monthly pivot, so that makes it a little bit tricky. I think if we were to go to there, and there's 2 ways, this is pretty binary for me. If we broke the monthly pivot, came back and retested it from there, then I think we're back inside the bigger range and there's a long on offer. However, if we bounce off the monthly pivot and put in a lower high, I think we're down to the 74 mark again. So there's, as I say, it's a bit binary, and again, it's a CAD trade, so oil is going to be very, very important. No structure there, no structure there. The only other one I really wanted to focus on was the Aussie. Now, you'll note, guys, that I haven't even mentioned anything against the US dollar here. And there's a reason for that, because I'm very, very skeptical as to whether it is a buy or a sell US dollar. Reason, because of what Julian and others have spoken about, Justin as well, and Ash to a degree, the world shortage of US dollars, which is why I wanted to question Justin about this. Okay, you don't need US dollars anymore. You can pay us with whatever. I don't even know what that means, that I got a glimpse of last week, but Justin explained that for us. I really don't know what the US dollar is capable of at the moment. So trading anything against it is a bit of a lottery for me. So I've really steered away from it. But from and I don't often say this, from a fundamental point of view, forget against the dollar, the Aussie in my book, and I'll use the dollar chart because it's so easy to depict what's happened with the Aussie dollar. But it's also happened with a lot of the other crosses as well. So you go back in time and have a look at, well, let's have a look since it's the crash began way back here. There's barely been a time that the Aussie has rallied, and only through 2015 Brexit time we're talking through here. Why, I don't know. But it did, and it came back and formed, pardon me, a significant swing here. And since 2000 or late 2017 and 18, it's just been let's sell the Aussie time. The reason for that, I believe, is multiple. Interest rates. The Aussie in large doses led the interest rate cuts. And in particular against the US dollar, the interest rate differential just got ridiculous. That's one reason. Then we had a string of natural disasters, bushfires, trade wars. That's a natural disaster, pretty much. And of course, when China was experienced the first outbreaks of coronavirus, one of the first countries to go down the tube would be Australia for reasons, no supply issues, or plenty of supply issues. We can't trade with our major trading partner during that period. So Aussie dollars are not required by anyone anytime soon. I think that's about to change. We spoke about this a few months ago when we had bushfires, and I was asking Julian what he thought about the insurance money and when that was likely due to come through to Australia. Of course, the insurance money will be multiple billions of dollars. Now, that's not trillions, I understand that, but it's a significant amount, and that's been held by massive underwriters. Think Zurich, think of all those type of underwriters, insurance. Now, they don't hold that insurance money in Aussie dollars. So what happens, and we're due about now for all that money to start flowing through, that money should be coming into Australia very, very shortly, if they've got any money left. So that will now be, whatever they've been holding that in, I assume it was US dollars, that will now become Australian dollars. So that money is going to be injected into the Australian economy. China, in its inverted commas, manufacturing increase over the last week or so, or couple of weeks, and this will take some time, I'm sure, because of the supply chains and transport situation. But with China coming back on board, then if it's the first one to go down, logically it'll be also the first one to come back, in my opinion. That's the Australian economy, because of the demand for our resources. So I believe that that's double banger, if you like, and the fact that coronavirus is affecting the whole world, not just Australia, puts us very much on a level playing field at the moment, if not in a beneficial situation to take advantage of what may happen in the next few weeks or months upcoming. So that's why I'm an Aussie bull, but I don't really want to trade against the dollar. I'm happy to trade it against pretty much anything else. And that's pretty much where I'm at, mate.
Geez, man, interesting. I think there's a real risk here that Australia may yet pay for being the slowest to react to coronavirus. I'm trying to think of a country other than Australia that's not in lockdown. New Zealand is.
When you say not in lockdown, aren't we in lockdown?
Queensland's not, is it? Queensland's not business as usual.
Oh, that wouldn't surprise me.
That's Queensland.
I think Queensland.
Sorry, guys. Honestly, I don't want to shock you guys, but they are part of Australia.
Yeah.
No.
They are.
Really?
And it's going to be reasonably hard. I think Queensland feels that the rest of Australia's quarantined from them. I could be wrong. Brazil's not locked down. Crystal tells us Brazil's not locked down. Well, to be fair, we don't trade the Brazilian peso. Is it Brazilian peso? We don't trade the Brazilian currency very much. Look, Jeff, I'm worried about Australians generally have got a they don't believe in anything that's inconvenient to them. Global warming isn't true because we're bad for coal exporting. Coronavirus isn't true because they won't be able to go to work and go to the beach. They might be still some pretty harsh lessons on your side of the Tasman. I don't mean to say it in a nice way, Jeff, but I guess the feeling to me they haven't paid it to respect that other countries have.
The fact that they're dickheads doesn't really amount to much when they've still got a lot of product that's going to go overseas, I don't think. And as I said, a fair bit of insurance money is going to pour its way into here in the not too distant future.
Look, I would have thought the insurance money was a certainty after the fires as well. So yeah, I get that that's really, really true. I think they might be. It's one of those things where you guys are an island like we're an island, and if you don't lock down properly soon, you might be locked down after everybody else. And I'm not sure that's a great thing for you guys. Again,
as I said before, and I said this, the one thing I could not believe and was extremely angry about was those 4 boats that they allowed to dock into Sydney Harbour.
Absolutely furious about that. I couldn't agree more, Jeff. It's just been, you ready for this? They're going to have a royal commission into it. Unbelievable. But
I hope they have a
it's
royal
too late.
commission of a few things in New Zealand as well. But look, it is
Freaking late.
Well, again, we're talking about trading, and I think that I think if you're going to get long Aussie, you've probably got to have a look at the infection rate. I was talking to some guys about this today that, to be fair to Australia, for mine, this is what I do with coronavirus, and this is not scientific, but I look at the total cases and look at the new cases, and if the new cases are more than around 10%, then in my view, you're still in a lot of trouble. And if the US still manages to pile out for it to double in a week, it's got to be 10% a day. So the US generally has about 25. They had 250,000 cases, 25,000 new cases, about 10%. We're starting to see that number drop away in parts of Europe. Italy at the moment, 124,000 cases, 15,000. No, that's new deaths. Sorry, that's not new cases. Yeah, sorry. Look, it's so if you're looking for a way to work out whether a country is doing well or poorly, if you have a look at new numbers as 10% of the total number, that number and up, you're looking at doubling weekly, and that's the number that destroys countries.
We're at 7, I believe.
You're at 7.
So I'm led to believe. Well,
7.
That's the latest news I've heard.
7 what?
Percent.
Possibly. I don't know what you had yesterday. Today you've only got 137, but I would think that you might be. It only starts at midnight UK, so you might have a fair bit of to go before you finish reporting for the 24 hours to that. And I can't go back and see the previous 24 hours, but I think you've got to believe it's under control for Australia to lead the way out. And to be honest, mate, good luck to you. I hope it is. I really do. Been a full-on show, guys. We have had Justin come in early and talk a little bit about the way he sees the market from an institutional point of view. Talk about the interview he's going to do with me next Sunday night for Actions to Wealth clients. We're up to 6 Actions to Wealth clients. We'll get the chance to do a exclusive program with Justin over the next 3 to 6 months. Some availability from we've never been able to have before, and for the first time ever. His mentorship stuff will stay separate. It'll be the fundamental stuff that is his mentorship stuff, but for the first time, Justin's going to share his strategy. A strategy I think he's developed from his time with us, really, but his strategy is going to be shared with you guys. I've seen the numbers on that strategy. It is sensational for reward to risk when it gets down the time frames. Excuse me, guys. He'll be talking to us on Sunday next week. Ash and Jeff have been in there on live Monday, Tuesday, Wednesday, Thursday for UK Open and now for US Open. So they'll be up at 9 p.m. Monday, Tuesday, Thursday this week, and Monday, Tuesday, Wednesday, Thursday for the next week. It's a must-watch show, guys. If you want to just watch some traders just relaxed and chilled and at their job, then watch those guys and listen to them. Angie's come in and talk about the big winner on oil following the big week winner on gold. And Julian's come in and given us some market overview. So it's been a big show. We've been at it for an hour and a half. We're going to wind it up, and thank you guys very much for joining us. We'll be back same time next week. Actually, we might be back. Excuse me, guys. Just to be clear, it's just a cough. No corona here. Just a cough. Just a cough. We might be back at a slightly different time next week. Twice a day, every day. We'll be back next week, possibly a little bit later, but we'll confirm the time closer to it. Cheers, guys, and thanks for joining us. Thanks for being with us on the show. We really appreciate your time.
Have a good one.
Thanks. Bye, everyone.
Thanks for all the nice thoughts. If you're on YouTube, give us a like, and you can always click on that link we put in there to join one of the broadcast groups to get some free information. If you're on Actions 12th, we will talk to you guys in the next few days. Cheers, guys. Thank you very much. Thanks for joining the show. See you guys. Bye.